Good morning, everyone, and welcome to the European Cross-Up webinar. We are seeing a pretty good sell-off here in equities, and we are actually at some key support here, actually in the NQ futures, and we're going to flip into that quickly. And just want to go and share that we're right here into support. We've just tagged it right here at 11,806. So at this point, you really got to be careful if you're short because you come into a value area. Doesn't mean we can't go in and take this out, but we've already had one quick fast dip from this area. You can see they made up to 11,900. Turn around quickly, saw a quick shallow dip. Quick dip, and right now we've just a little bit stretched here into a bit of a value. It doesn't mean we can't push a little bit lower, but we've had a pretty good sell-off already, so you'll probably see a little bit of I wouldn't say a snapback, but an offset of this as we've come right in there and tagged that 11,806. And we can take a look here at the S&Ps. There we go in the 2-hour chart, and same thing here. As you come in right there, we actually just tagged at 35.44 right there. There we go. So a bit cautious, or exercise a little bit of caution. If you're short, you may want to go in and tighten up those stops. We may go and see a little bit of a pop back, at least initially up here to this 18, probably an initial little pop up here, potentially up here to this 1834, 18134. So careful on that. But we've already seen a pretty good sell-off here as we've broken low. We are below same day VWAP. Obviously, we've gone and punched in much lower, so we'll see how this goes and steps in. But we are a little bit overdone, come into a value area, so look for a little bit of potentially some short covering coming in. We'll go in and take a look where we stand right here on FX. We'll get to that. See the dollar's just gently higher, really not even much. If you consider how much we've sold off already in equities, you would expect far more demand in the dollar. And I was talking to some people yesterday, or mentioned a couple of people in the chat room in the Asian session. I forgot who was asking, and I said, it's really more about, I think that we'll see a pullback in these majors, but I think, it's more about a pullback in risk versus any kind of real demand for dollars. Let's go and take a look here on the euro dollar. And you can see here we've dipped down here to 1828. And we did have, if you look on the euro dollar, nice gravestone doji from yesterday. It really has opened the door for this to go on and pair back. Take a look where we stand here with the cable. Something similar to also, and expecting also a little bit of a pair back. Another interesting one that we saw yesterday, we had our, which is on the Kiwi. Our bias chart yesterday was at 69.35 bias chart resistance. We talked about, remember that key resistance which held last week, weekly close is 68.96, and that held it in check. We actually paired back last week, all the way down. Actually, I didn't even notice right here. I thought we had gone down to 68.30. We actually went down to 68.10. And so that held in check, but we made another stab. But keep that in mind, is that weekly close is at 68.96. We are actually below that right now. We did get up to 69.35. That's our bias chart resistance. We got up to 69.46. And let's go and take a look where we stand here with the calendar. coming into today. No real data here on the European front. Some current account data, but nothing of any real significance. When we come into, we do have CBI trends, UK CBI trends, but as we come into the States, we will have initial jobless claims, Philly Fed, and then we do have existing home sales. And on a lower tier, we have a Kansas City Fed Manufacturing Index. So we're testing that 11,806 in the NASDAQ right now. Let's go on and we'll take a look at what we have as far as any news, which is not that much. Taking a look here, it says the sliding dollar steadies as the virus worries persist. The dollar nursed losses on Thursday following the sessions of declines of investors' long-term optimism about COVID vaccines ran into worries about rising infections and the risk to the fragile global economic recovery. Small gains against most majors and the greenback from Wednesday night's 8-session low against a basket of currencies, but it remains near the month's trough of 92.12. Surging coronavirus cases in the U.S. have exerted opposing forces on the dollar, with the safety bid supporting the currency with a fresh speculation of monetary easing. And so when someone was asking me about the dollar last night in the Asian session, I said, I think this is more of a knee-jerk reaction than anything else. Knee-jerk, hey, equities are selling off. You see the bid in the dollar, but you can see it's a scant bid. If that was really buying, if it was really reacting to that, there was a demand for dollars, you'd have seen a much stronger move than what we've seen. This is just more about a pullback in risk on currencies, i.e. the euro, versus actual buying of the dollar. Concern has also driven the safe haven yen about 8/10 higher this week, recouping roughly 3/4 of the steep loss it suffered last week when Pfizer announced its COVID-19 vaccine. The euro had pandemic problems of its own, and lockdowns spread across the continent, and it softened marginally to 1846. And bear with me. Immediate risk posed by the surge in the infections in the U.S. and European economies have become too large to ignore an economic decorayo and currency strategist Philip Wee from Singapore Bank said on a note on Thursday. Negative surprises over the Brexit talks are also expected at the EU summit today. The Times newspapers reported Europe's leaders demand the European Commission publish no deal plans as the year and the deadline's near. And it says a skinny free trade agreement with potential concessions on fisheries and state versus aid versus no deal risk. He said with the latter potentially triggering a 10% drop in sterling. Elsewhere, the South Korean won. Well, I'm not going to worry about the South Korean won. And referencing the Fed, the dollar's gains in the wake of the vaccine announcement, traders quit the safe haven currencies have now nearly evaporated as the selling pressure returned to the greenback through this week. With fiscal stimulus gone by the wayside and Trump's refusal to concede defeat lawmakers, whose tension and speculation is growing that the Federal Reserve may further loosen monetary policy at the meeting. And you can see right now, we just went and tagged that 1830. We came right off of that 1806. I think there's a reasonable risk that the Fed does have to do more because the fiscal response may have come until the end of the year. That's months away. And the Commonwealth of Australia currency analyst Joe Capruso in Sydney noted. And that's going to be it here. There's a reference to Bitcoin. I really don't follow Bitcoin. Obviously, it's been higher. I'll just scantily touch on it. Bitcoin surged to the cusp of its 2017 high, with mainstream usage as a form of global and uncertainty in financial markets. There's also a lot of difference as to what's been happening before, but there's no real significant news here. The steep trajectory of the 2020 rally, buying spree pushed it to nearly 20,000, only to crash more than 50%. Well, that's all in the rearview mirror, so I'm not going to bother with that. I don't see anything else referencing as far as some of the Antipodean currencies, which we usually get, like the Aussie dollars. So with that, we'll just go on and move into the analysis. And just pulling up the bias chart. In the meantime, I guess while we're pulling that up, I guess we can take a quick look to see what, if anything's happened with gold. I'm sure there's been some movement. So we have seen gold going to dip here. We've almost said, originally we had looked for an area. This is way back when we're looking for that. Remember 1827 to 1844. We did make it, I think it was 1846, but that's a few days ago. So maybe we'll have enough of a scare to dip down eventually down to this 1827-ish area. See here. That's where I thought we were going to move to. We actually came up short at the time. We came pretty close back then, which was in September. We made a revisit down here, but that's a pretty good little value area. If it get another scare, dip into the 1827s, and then that's going to be a pretty good value area right there. As I noted here, you can see where we tagged that 11,806, and we've already seen a decent little bounce up off of that. Let's go and get into the analysis though. And Amir says to look at Tesla. Yeah, we'll get to that when we get to the equities. We're actually starting on the FX, so bear with me. So the euro posted a gravestone doji on Wednesday, unable to move above 1900. And you can see yesterday we had bias chart resistance the other day. What was it? 1897, and the high was 1892. Then yesterday we moved it to 1898, and the high was 1891. We've actually been on this one pretty good. But anyway, the euro posted a gravestone doji on Wednesday, unable to move above 1900. The pair is susceptible to pullback going into the end of the week. Support on Thursday will be 1814 with resistance at 1882. So 1814 and 1882 for resistance. And so far, the low has been 1820. 1821. It's not bad. Let's go and move into the cable. So the cable posted a gravestone doji with the potential pair back. You can see here. Resistance on Thursday will be 32.82 with support at 31.81. So it's actually holding up pretty well though. Thought it might have been a little bit lower. So 31.81 on the low side and 32.82 on the upside. And on to the Aussie dollar. The Aussie posted a medium-legged doji. You see that? Immediate support is going to be 72.58 with resistance at 73.22. So we are looking for a pullback here on this. So 72.58, 73.22, and onto the Kiwi. So the Kiwi ran out of gas as the market moved towards 69.50. Resistance will remain 69.35 with support on Thursday at 68.55. So just one tick higher. And not bad. I mean, we had 69.35 yesterday and the high was 69.46 or 45. So not bad. And keep in mind, remember that weekly closing resistance is 68.96. Last week I had 68.96 as our weekly closing resistance. We had that as our bias chart resistance. We even had a hash. Remember, we even put an asterisk next to it. 69.13 was a high, and from there we sold off all the way down to 68.09. So you can see here we had a pretty good pullback. So keep that in mind once again. So now let's go move into the dollar CAD. The dollar CAD posted a minor hammer. See that right here. Closing just below 31 even. Support on Thursday will be 30.54 with resistance at 31.42. So the low here looks to be about 30.80-ish or whatever. But 30.54 would be our support with resistance at 31.42. Oh, we do have already had it at 31.42. Still remains bearish. With that, we'll go and move into the dollar peso. So the dollar peso managed to close above the pivot of 2023. Support for Thursday will be 2023 with resistance at 2043. We've actually made a little bit of a run up here. So 2023 remains that pivot. We did manage to close above it. That will be support, and you can see so far the high was 2043, and we've had our bias chart resistance at 2043, and that's the high so far. So well done there. And 2023, the pivot for support. So the dollar yen continued to press the downside, challenging 365. Support will be 363 with resistance at 429. Boy, this thing has really gotten so weak, and I was even surprised it got that weak. So 363, basically just looking at the lows to make a stand there. And the upside 429. And onto the cash dollar index. And you can see, look how much the equities have sold off. And look, we can't even muster much of a rally. And that's what I was referencing in the Asian session when I was talking to someone. I said, look, it's a knee-jerk reaction, but it's I think the individual was saying, boy, do you think the dollar's going to take off? And I was like, it's more about, I mean, a risk, a pair back in risk on currencies that is actual dollar buying. And this is evidence right here. We've seen equities continue to sell off and barely adding on to gains here in the dollar. So the dollar posted a mini hammer. You can see that right here. As equity sold off on Wednesday, resistance on Thursday will be 92.87 with support at 92.26. When I said the knee-jerk reaction, which is, like I said, I even said on that, old habits die hard. Equity sell off, buy the dollar. Equity sell off, buy the dollar. But it's really not about buying the dollar. It's just about risk currencies coming off. With this, let's go and move into the cross rates. And we've had the 71.57 for the last few days right here. And it's actually held up really well. Look at that. Boom, boom, boom. We took a dip. But we'll look for this to press a little bit lower, just much. Let's see if they push some stops. And if they do, that's if they do, we'll go, here's the key level, 71.40. You can see that. Let's see if they'll just press that just a hair lower, and we'll go right to that level, this body close, which would be 71.34. So this has served us well over the last 3 days. We'll actually move this down to 71.34. You can see here we've had nice rebounds against that 71.57. Look at that. So moving it down to 71.34, and resistance is going to be this body right there, the opening right there, and that would be 71.85. Looks like we got just a hair above it. That's probably a little bit too tight, but we'll just leave it for 71.85 for today. And on to the euro pound. Well, this thing's just a mess. I don't know what to think about it. Yesterday we hit at 89.29. We got as low as, and I think at the time we came on air it was already there or something like that, but we got as low as 89.14. This key level is still standing, and we'll just go with that level. It seems to be holding in check for now, which is 89.68, which we had 89.68 yesterday. And the only difference is on the downside right there. You see the top of this wick? That will be 89.17. And as I've noted before, is in the webinar, when we do this bias chart, is geared towards providing you the levels that we're looking at over the next 24 to 36 hours. So that's why they're so tight. We're not looking to say, well, if it goes and bottoms here, we're looking for a move up to 91.50. That's not what this show's about. You're going to use this bias chart as a tool in conjunction with your own analysis. So it's very short-term levels that are basically the resistance and bias chart for the day, looking out up to essentially 36 hours. And what we're looking at is this. Quite often this will come out. We saw this with the euro for the last couple of days. We've come within literally a handful of pips of the high on this, but it's not geared towards that. As I've said before, it's an area where I think that you're going to see volume come in on the upside or to the downside. Case in point, the Kiwi. we had 69.35. The high for the day was, what was it, 69.46. So, we came within 10 pips or 11 pips, whatever it was, and we're lower. Last week, we referenced that. Even though we got to 69.15, I said, or 13 it was last week, there was a high. I said, hey, look, 68.96 is a closing weekly close. We even put an asterisk on there, and the market was above it, but it still didn't make any difference because that was a key weekly closing resistance. And then we saw this market sell off all the way down to 68.10. So that's what I'm saying. It's where I expect volume to come in, whether it's to the upside or to the downside. So that being said, let's go on now, move on to the euro odd. So kind of like a mixed bag right in here. We're just a tad bit higher. I really don't see where there would be any changes here. We had 62.84 as the high, and that was for yesterday. And the high actually came in at 63.04, and right now we're at 62.77. I'm going to stick with the 62.84. And on the downside, same thing, 62.04. I'm going to stick with that. The low so far today has been 62.15. I'll go with the 62.04. No changes on the euro odd. We'll go and move into the Kiwi. And we had 71.50 yesterday. We did take this dip down here, and look, this body coming in right there. See there? That's where we should see some demand emanate, and that would come in at 71.03. It's just a touch below today's low. So 71.03 on the Euro Kiwi. And on the upside, keeping it simple, we'll just go with the body close from 2 days prior, which is going to be 72.06. And then onto the LCN. Now we had 75, 72 yesterday as our low, and you can see we went just straight with the level. And you can see that it took it out by just a couple of pips, and we came off of those lows. We closed the day at, what, 72.85. Not a whole lot off of it. We're pressing those stops, which is something that we were looking at also. Remember, I think it was at the Kiwi yen. I said, hey, they'll probably try and press beyond that level for today. Well, we're seeing that here in the Aussie yen. So we're just going to keep it simple. We've held this area, so I don't think they're going to blast through it. Anything's possible. So let's just go with the wicks right there for support, which is a little bit close, though, but we'll go with that. 75.44. We expect some demand to come in volume-wise. And on the upside, resistance is going to be this lower wick right there from 2 days ago, which would be 75.87. And let's go on to the guppy. We did press the stops here. We had support yesterday at 37.43. This thing closed on its lows with a low of 37.67. We have pressed beyond the 37.43 for today, but we're looking for support. We're going to go look as we start to break, and look how we've maintained these levels below the 38.9. So we need to go in and press into where we see some actual real volume, and that'll be the bodies and the wick touches. So you see this body right there? That's 37.21. You got this wick here. You see that right there? And you got the tops of these wicks here. So let's go with this body touch right there. And that is 37.21. And resistance, if they do try and put it at the bottom, it's going to be this 38.09. And let's go and move into starting odd. So we had 81.13 as our support yesterday. The low was 81.17. We'll keep it at 81.13. And on the upside, we had 82.12. We're kind of holding. I don't really see any need to go in and change that. You can see right where we got it from, this body close right there. So I don't see any need to change it. So that's going to be the same here. No changes. And Amir wanted to look at Tesla. Let's take a look at Tesla. Well, one of the things that's interesting about Tesla is because there has been talk about this 503. We came pretty close to it yesterday. I thought they may want to still try and tag it, obviously because we're under some pressure. So even though equity is under pressure, it's still holding up relatively well because it's going to have that inclusion into S&Ps. Taking a look from the daily standpoint, they did make it up to this 491. Hang on. And there's been talk about this 503, which I guess was the previous high. No wonder. I hadn't looked at it on the daily, but obviously the key thing right now is this 491. Can we make one more jump? Maybe so, but that might be a little bit tougher because of the sell-off we're seeing in equities. But that being said, they know those portfolio managers are going to have to buy for this inclusion in the S&P. So Amir also wanted to take a look at natural gas. And we said, here's that demand area right here. And that's going to be 263. Remember we talked about that 263? I think you asked me a couple of days ago. And I said, as long as we can hold against this 263, well, we did. We didn't even get down to the 263, but they came pretty close. They got down to 265 or 264.60. We had this 263. We did see a nice little rally up here to 278 for paring back. My guess is they want to test this and maybe even dip below the stop. So right here, which is 263. Maybe test the stops here, clean the stops out here. If there's no follow through, probably dip below the 263 and then maybe come back. And then the key level would be that body right there, which would be 277. But I think you have to come down here and see if they can test the stops. Okay. And Giuseppe had a story about Tesla. Yeah, Amir says that it's on the 200-day moving average or 200 weekly moving average in natural gas. I mean, it's still looking pretty good. Hang on a moment. I think we even took a look at it on the weekly, if I remember correctly. Yeah, you see how it looks like they want to come down here and test that. If to me, it looks like it's going to end up falling back. So if you do get a bounce off this 260, 262 area, 260, to me, I think it would be a bounce to fade without it proving itself, unless it turned everything around, started moving. I would say any bounce off the 263, I would use as an opportunity to go and fade until we got a weekly close above 288. I think we had referenced that before. So that's a little bit longer term view. So if we do get this move down to and test those stops at 263, there's no follow through. My guess is fade any moves unless they get a close above 288, and that's on a weekly close. We are seeing in the pre-market a little bit of a snapback here off Facebook now. Got to 270. Not a big reaction we're seeing here. So we're going back and we'll take a look at the NQ. We did get that bounce, as I was talking about, off of that 1806. We did make it up to what was 1842, and we're kind of pairing back right now. But that was a pretty good volume when you look here. You see that? The amount of volume that came in. So you knew that that was going to probably make a stand here. You see on this way down. Of course, we made it move lower, but still there was some good volume. So this was a good area to step in. Like I said, if you were short, tighten up those stops. We did rally off of that about 35 handles or so. The market is pretty well overdone. Certainly in this sell mode here on the 30-minute. But like I said, when you take a look at this on the 2-hour chart, you can see came right into this 1806 and it's held. But they did go on and sell this thing off pretty good into this 11,898. You saw that. Made it up there, and then we just turned around, just got above that 900, and boy, did we see a pretty good sell-off. But it did hold this 11,806. All right, there you can see that. Take a look at the S&Ps. We've made a pretty good stand here above this 3540 as far as trying to hold it, up at 3551. And onto gold. We still have a potential on one more dip into that. We talked about that 1827, 1840 area that we talked about. You can see that there. We could come down here, swoop down here and clean out these stops and maybe make it down here to 1827. From a little bit longer perspective, you can see here 11,829 on the NASDAQ daily, but we did get down to 11,806, which is on the 2-hour chart. On the S&P, look at the daily, some support right there, which would actually come in 35.37. So we should potentially see some demand as we make it down here if we do get there, 35.37. And a pretty good little pair back here in Apple at 117, Microsoft 210. We did go on and cover these a couple of days ago as we were looking for a pair back. I thought we would see actually a little bit of a rally yesterday and then sell off, but we've seen a pretty good little sell off. A lot of worries as we see more closures with coronavirus and also concerns about are we going to do something with the stimulus bill. So we have gone and established those levels we're looking at. Be careful on this NASDAQ. Like I said, we did come up to 11,806. We may come down there and revisit it, but be a little bit worried. There's some demand. Even if we step below it, there's going to be some demand right there. So if you're short, tighten up those stops again. And that'll do it. Thanks for joining us here on the European Crossover webinar. And we'll see you in the chat room.